Hello, my name is Nifty Gnome, and welcome to my live action bookkeeping video. This is video number 6 in the Grand Gate Gardens case study, and this video covers April week 5. That's April 26th to May 3rd, 2025. Check out the link below to download the documents, request a topic, or find out more about my case study project. Now, on to the bookkeeping. So here I am logged into the Grand Gate Gardens QBO file, and we are now on the week 5 of April, and I'm going to go first to the bank feed downloads, and we're going to upload the QBO files to the bank feed. And this week, there are transactions in 3 of the banks, so let's go ahead. Go over to bank transactions, and we have to upload these files because there's no direct link to the bank because it's a case study and the bank is fake. So to upload a file, we're going to go drop down here and we're going to say upload from file. And I'm just going to drag over the first one, which is the Canada Bank Checking. And I'm going to say this is Canada Bank Checking and continue. Done. And then next, I'm going to drop this down. I'm going to upload from file, and I'm going to upload the next one, which is the CIBT line of credit. That's a new one. So CIBT line of credit. Continue. All right, and we're done. And then last one here is the upload from file. It is the Triangle M card. Continue. Triangle M card, continue, and done. So the way that I do bookkeeping is, first of all, I enter the source documents. I do refer to the bank feed if I have questions. That's why it's nice to have it there. But first of all, I enter the source documents, and then I come over to the bank feed to deal with the bank feed info lines. So let's take a look and see what the first folder is. So we'll go back up and we'll go with notes. And the first one is charges. So this week it shows us 3, but take a look at these numbers. This one is 1 and 2 combined, and this is just 1 and this is just 2. So right now I'm going to take a moment to discuss the differences between a purchase receipt, a payment receipt, and why we need both, and how to upload them if you're doing digital documents yourself. So right here, this first one, I'm just going to open it up, and we can see that it is a restaurant receipt. Now, Sarah has written down here that it's a meeting with client Ray Gunn. That's excellent. I do ask that anybody that I'm doing bookkeeping for, if they're purchasing something that is a meal, that they need to write how it is business related. A lot of people feel they can just sort of claim all the meals, and that's not true. But a good yardstick for knowing whether you can claim something as a business expense or not is, would you reimburse an employee for that? Okay. So, for example, if you've got a sales manager and he says, for my sales pitches, I need to smell good, so I need you to pay for my toothpaste and deodorant. Like you'd say, no, I'm not going to reimburse you for that. That's personal care, right? Or maybe if a salesperson took a client out to eat at a restaurant and they said, oh, we went to this restaurant and we discussed the landscape installation. Here's my expense report. Well, yes, you would reimburse that. But what if your salesperson decided to go to McDonald's every day for lunch? And then gave you, just for themselves, right? And then gave you their McDonald's receipts and just asked you to reimburse that. As their employer, you'd be like, no, you're responsible for your own lunches in general, right? So a good yardstick is, would you reimburse an employee for that? So this is an example of a business meal because they're meeting with a client. Sarah's meeting with a client to discuss a landscape installation. And she wrote that right on there saying why it is business related so that I can go ahead and enter that confidently, knowing that I'm not claiming something that isn't business related. But the problem with this purchase receipt is that it doesn't show me how much tip was paid. It also doesn't tell me how it was paid. So you'll come across locations where the register is separate from the payment processing thingy. And when that happens, the receipt doesn't show all the information that's needed. Like, how do we enter this? Is this paid by cash? How much was actually paid? Not enough information is here. This is just the purchase receipt. It's got the information, the pre-tax and the HST and what was purchased. So it is very important. But a lot of times you might only get this one, which is the payment receipt. So this is the payment receipt. And as you can see, it doesn't actually say what was purchased. Like maybe they went into the pub and they bought like a $60, bottle of whiskey, I don't know, from the bar. And how is that business? Like, I don't know. And what are the taxes on that? Like, if it was a big thing of water, I mean, obviously that's a rare example, but the point is it wouldn't pass an audit or review, right? Because it's not saying what was purchased and it's not saying what the GST HST was. So it's not quite enough. We can guess from it if it's all that we have, but the business owner needs to understand that the payment receipt is not enough. We need the purchase receipt and the payment receipt. This does help us though, because it does tell us that there was a tip, the amount that hit the MasterCard, and that it was the MasterCard and what card was used. So this is also very important information. We need both. The problem is, because there's two receipts, you'll have business owners or employees uploading two receipts. And when they're uploading two receipts for two different amounts, one's paid by MasterCard and the other one's paid by, one might get put in as paid by cash, right? And then the other one's putting as paid by MasterCard. You've now got that entry in twice. So you want to avoid uploading the purchase receipt and the payment receipt separately. It can cause a bit of chaos. So what we need to ask our business owners to do, or employees to do, is when they're uploading their documents digitally, and I say this because a lot of times people are using their phones and maybe Dext, HubDoc, Dropbox, Google Drive, whatever it is they're using to store their documents digitally, go ahead and put them beside each other before taking a photo and uploading them. And that's a request that we need to ask everybody who's managing their paperwork, because that's going to make the bookkeeping efficient. It's going to take more time if somebody has to stop and try and figure out, how is this paid? Look at the bank feeds. Do I have the bank feed up? It takes time. Don't pay for wasted time. I'm a hashtag avoid double work. And not only does it make uploading them together make the bookkeeping more efficient, it also avoids the risk of double entered expenses, which is going to decrease the accuracy of the bookkeeping. So more efficient, more accurate, less photos for the person taking the images of the documents as well. So it's just a simple thing that everybody needs to do. Payment receipt, purchase receipt, put them beside each other and upload together. Now, these are the only receipts that you upload together. Generally, it's one transaction per photo, per upload. So that's a conversation for when we dive into Dext a little bit more. So let's go ahead and enter this into the bookkeeping. So this was in the charges folder. So I call this a charge entry. A charge entry is when you've got an entry where the bill date and the pay date is the same date. Also, there's no check number and bill number that we need to track separately. And also, not multiple bills are being paid all at once. So that's what I call a charge entry. This is classic charge entry. We're going to go new expense. That's the screen that I use for the charge entries. And this is Waterstone. And it was paid from the triangle. So it means 5252 right there. Payment date was May 2nd. And reference number, I say MC5252. When there's no bill number to put in there, I just put in the method of payment and last four. It's a Gnome thing. It's not required. I just found that it makes my troubleshooting easier. Maybe the payment account, because QuickBooks is online, sometimes there's a bit of a lag and it looks like this is the payment account. And then later on, QuickBooks reverts it back to the older one, just it's an internet time lag thing. So this helps me know, I meant to enter this as a MasterCard if I'm doing troubleshooting later when I'm trying to reconcile things. That's just a Gnome thing though. So when we get to the body of the entry, there's actually a few different ways to put it in. I'm going to show a couple today. So the first one I'm going to show is the two-line method. So we're going to put this towards meals and entertainment. And I'm just going to put in the description here, meeting with client Ray Gunn, just so that if it's ever audited or reviewed, CRA can see in the list of meals why this one is a business expense. And Because we're doing the 2-line method, this can actually be used if you only get the one receipt, okay? And so if we only get the one receipt, we can say inclusive of tax. And I'm going to assume that the 6239 has HST in it because it's in Ontario, and this isn't part of the time period that was a GST holiday. Now, if we didn't have the other receipt, we wouldn't know for sure, and it might not pass a review or audit. So definitely you would communicate to the business owner that this might not pass a review or audit because it doesn't show what was purchased. So what if it was the type of gastropub that sold pies on the side? I've seen that happen. And if that's the case, maybe it was considered a grocery that they had purchased and it was 0 rated. So we definitely need to see the purchase receipt. But in this case, my degree of certainty would say there's most likely going to be GST, HST in that 6239. Now, there are bookkeepers that say, if I don't see the GST, HST, I just won't put it in. And I know a lot of good bookkeepers that do this, and it is sort of audit safe, so to speak. But my approach is I'm trying to get the bookkeeping as close to reality as possible. So what is my best guess with the high degree of certainty? So I have a high degree of certainty that there's probably going to be HST in the 6239. So I'm going to say 6239. And since I said inclusive, I can say put HST in like as part of that. So you can see that the 5521 is what's going to meals and 718 is going to HST. So if we were to flip back to the combined upload, we can see actually the HST is 717, a penny off rounding. Not a big deal when it comes to HST for penny rounding. Our main deal is we want to make sure that our MasterCard reconciles. So again, though, this is actually meals and entertainment, right? So we can drop this down and we can use the meals HST. So what's happening with the meals HST is it's putting half of the 13% towards a claimable GST HST credit. And the way that we set up that meals HST is it's putting the other 539 towards back to meals and entertainment expense. And we'll get to see what that looks like on the ITC listing when we go and prepare the HST for the quarter that this is in. And then what we can do is we can just tab down to the next line and we can just go ahead. You don't have to say tip, but we can just put it in here. The tip was 9.36. And that, of course, has no HST on it on the tip. So there's also a single line way of putting this receipt in, slightly complicated by the fact that we need to split the HST here. So this is how I would do it with a single line. Doing it with a single line, it's just a personal preference. Sometimes it's quicker for me, but also then there's only the one line going into the general ledger transaction listing, the one that says meeting with client Ray Gunn. So this is just a personal preference. Both roads lead to Rome. So we're going to go ahead. Now, if we're going to what I call force the GST HST, we're going to want to make it exclusive of tax. You can't force or change the GST HST if it's set to inclusive. So I'm going to say exclusive. And I can do this because I have the purchase receipt that shows me the HST of $7.17. So when I put this in on one line, I know that there's only two numbers I need. I want to put the HST 717 down here, and everything else I want to go to meals and entertainment. So what I'm going to do is I'm going to take the total amount of the receipt, which is 71.75, and I'm going to subtract 717. And so of course 71.75 minus 717, the rest is what we want to go to the meals and entertainment. And we have this meals and HST sales tax set up. So this means we have to ourselves just divide the 717 50% ourselves. So we would say 7.17 divided by 2 tab. So we've got 359 there. And of course that it's not divisible perfectly. So we know we can just go 3.58 here, and that should give us the 71.75. So I'm going to go ahead and hit save. And let me just show really quickly, if I go to more, and I go to transaction journal, you'll be able to see now, and the transaction journal is what the journal entry is behind the entry that you've put in, you can see that QuickBooks, the way that we set up that GST HST to be 50% claimable and 50% non-claimable is putting the non-claimable portion back into meals and entertainment, and it's only putting the $359 towards the GST ITC. One other thing to note about this transaction is that if you do change something in the body, just make sure that you go back and fix the GST HST, because sometimes what QuickBooks does is it reevaluates the math if anything is changed in this section. So that's just another reason that some people might not like the one row method, is because there's that potential for mucking up the GST HST if anything gets changed. Whereas the other way we did it, you could go in, you could change the description and leave, and you're not going to be messing up what the GST HST math is that QBO re-evaluates. So pros and cons to both. So let's go ahead and close this and see what is next in the folders. We've got the bills up next. We'll open up bills and we can see it's Gnome hardware. Interesting, it's in the bills this time instead of in the charges. I wonder why. I know why. I put it in there on purpose. Because Sarah has set up a vendor account with Gnome hardware. You can see there's no payment details here, whether it's credit card or debit card. It just says charge. And in this case, what this means is it's charged to her account. Okay. So the payment date is going to be different than the bill date. And that's what makes this now a bill entry instead of an expense entry like we were doing with the charges when Gnome hardware was charged directly to the bank. So let's go ahead and enter this in. Let's go to new. We're going to go bill. And this is Gnome hardware. And the bill date was May 1st. And the bill number was XZ3009. Category, let's take a look. Okay, so she bought a shovel. Okay. And the shovel is not going to be a cost of goods sold that was used in the making of the thing. It's a tool. It's more of an expense, right? So because of that, we're going to put this to small tools and equipment. Notice that it's small tools and equipment expense, and it's an expense account. Now, a lot of bookkeepers might feel that this is equipment, which it kind of is, right? And put it to the equipment assets, which is a fixed asset account. Fixed assets are on your balance sheet. They're not going to show up on your profit and loss. But to put this towards the fixed asset account would be incorrect because it's not big enough. Like maybe if she bought a whole bunch and was reselling them or something, but just this shovel on its own, it's not something that you would capitalize. Now, the word capitalize, what that means is when we make it something that we have instead of something that's an expense. So something that we have is an asset because the balance sheet is what you have and what you owe. So from CRA's guidelines, we need to capitalize or put to the asset account instead of an expense account any asset purchases that are over $500. And if we look at this shovel, it is not over $500. It's just $34. So this is not a capital asset. This is not an equipment asset. This is why I created the account small tools and equipment expense for those small tools and equipments that are under $500. Now, whenever I enter in equipment, whether it's an asset or just a small tool expense, I actually put in the description what it is, because you can imagine what's going to happen is she's going to buy all of these tools and they're all going to go in the tool shed, right? And then maybe, you know, if she goes to sell the business, she wants to know what's in the tool shed. Well, now you're going to have a nice, concise list of everything that the business bought to put in the tool shed if you have the description in every time you buy a tool. So I'm just thinking ahead. And so I feel like that is the sort of description that's useful. So this is a shovel. We could just say shovel. We could put the whole description in. Usually if there's like a serial number on there, I'll put that in there as well. So for the same reasons. So let's go ahead and we'll say this is $33.99 and there's HST on our shovel, which comes to $38.41. $38.41, that is correct. So we're going to go save and close. That was the only bill. And let's see what is next in the folder. So next in the folder is invoices. Only one invoice, let's put her in. Now I've discussed invoices in earlier videos, so we're just going to pop this one in without much discussion. So I'm going to close this one. We're going to go new invoice, and it is invoice 1004. Usually it looks a bit, there we go. That's usually what it looks like. And that is 1004. It's April 29th. Oh, it was Barb. Dwyer was the name. Add Barb Dwyer. Save. And just a note, she lives on 314 Fence Circle. Yes. And I'm not going to put in the address. I'm just noting it because I thought it was funny. And then we're going to say April 29th, 2004. And it was garden design and installation. This is pointing to the landscaping income general ledger account. The rate was 500 plus HST 565 to confirm. Yeah. And there's no payment information on here for us to put in. We just putting in that it's an invoice. So we're going to go save and close. Easy peasy. What's next here? Let's pop it back. So we got a new folder this week for us to talk about. It is the payroll folders. Let's open up the payroll folder. And we can see there's a few things in here. We've got a new hire form. So let's open up this new hire form. What does it tell us? So Sarah has hired somebody called Kamal, Ahmad, and then this is where they live, and that's the email. There's their SIN number, their birth date, there's their hourly rate. Oh, and look, they filled in the TD1 forms, and this is very important for employees to do. If the employee does not fill in the TD1 form, go ahead and get them to fill it in. But if you have to run payroll before you have all the TD1 forms in, what we do is it says right here, if you do not fill out this form, employee, your tax deductions will only include the basic personal amount estimated by your employer based on the income they pay you. And the basic personal amount right here generally is $16,129. That's for 2025 for the federal taxes. And for the provincial taxes, the basic personal amount is $12,747. But Kamal was actually hired part-time. And Kamal has another part-time job that he was already working at before working for Sarah Gay Gardens. And he is consecutively working at both jobs during the week. Okay. And so what Kamal has needed to do is Kamal needed to go to page 2 and check this box that says he has more than one employer or payer at the same time. Therefore, he's already claimed the basic personal amount already of $16,129. A quick way of explaining the personal amount is everybody in Canada can make up to $16,000 and not have to pay any income tax. That's just a quick summary of what the basic personal amount is. And of course, that amount that you're not paying income tax on increases based on all of these other factors. I have a whole video on explaining this, and I'll link to that in the description below for further explanation, but also a visual representation of how it's working. All that to say, because Kamal looks at the job, he's not claiming anything because he's already claimed the basic personal amount. If we claimed it again, the math would almost look like he was doing $32,000 without paying any income tax, which is not true. Each calculator calculates separately, but that would be the net effect of that. Again, the other video explains it a bit better. So he's gone ahead and said, nope, it's zero. I've already filled out one of these forms. And he's done that also with the Ontario one. Even though Ontario puts a number in here, he said zero, and he's checked off here because it says, check this box and enter zero on line 10. So that is the interesting situation that we have with Kamal. Let's go back and see what else we have here for him. So we have what I call a PDOC printout. That's the Payroll Deductions Online Calculator from CRA. And I did this to give us some flexibility of how we can use these payroll documents. So in this case study example, Sarah has decided to use the online payroll calculator to calculate the deductions for Kamal. And you can see that she's put 0 in the when she was going through. And then she's noted what the pay period is on here, how many hours he was paid, and that he was paid with a check. And that's written next to the date the employee is paid, May 2nd. So we have enough information here to enter this manually. And I'm also going to illustrate what it looks like when we do it with the QuickBooks payroll. First though, if payroll is being tracked manually, which I generally don't suggest, it is worth the money to pay for payroll software. I have a whole explainer on why that's the case, but today that's my sentence. It's worth the money, even if you have like 1 or 2 employees, still do it. But people still use the online payroll calculator. So how do we put that in? And that's why I've also included this payroll tracker here. So you can download the payroll tracker also from my website. And there's a video explaining how to use it, all that good stuff. And so what you can do with this is you just fill in the totals in the cells that are outlined in blue, and then what it does, and there's room for 10 employees on this tracker. And then you can see it adds up the wages for each of the employee tabs for all of January, including the deductions, and then can tell you how much to remit for the payroll source deductions for that month, again on the 15th of the month following. So let's go ahead and show what I would do with this if it was being tracked manually. I have the information over here, but I'm just going to fill in really quickly. I would put the name here, Kamal Ahmad, like that. And I would also put their address here. It keeps it all together for me. New hire form, I got it here. So I just say 458 40th Street in Townville, Ontario. And that's K7G1C1. And then SIN number is 495974156. So be very protective of those SIN numbers. That's another reason that using payroll software is good, because you don't have it sort of randomly recorded in editable or viewable documents. So these are the weeks in the months, and that allows for either weekly payroll or bi-weekly payroll, even like weekly payroll with a bonus. So that's why I have the 5, but you don't have to fill them up. Looking at the PDOC over here, the Payroll Deductions Online Calculator, he's actually being paid bi-weekly. So he's worked 38 hours in 2 weeks. So let's go ahead, and that date was May 2nd. So let's go here. It's the first pay period in May. So that's why it's on this line, and we say May 2nd, 2025, and the hours paid was 38, and then the wages, we can just do a quick double check here, equals this times 19.5, 741 it is, and I can tell that she's actually not paying out the vacation pay on each paycheck. He is accruing the vacation pay because that wages amount would be higher, right? Because the wages amount would be 4% of 741, and she is not doing that. And I made that decision on purpose to illustrate something later on in the course. And so the taxes deducted are, and I'm going to pull this over, and right here we can see that it splits out the federal and the provincial, but the total tax deductions on income of 130.42, that's the amount that we're going to put in. So let's go ahead and put that in. So the tax is 130.42. Now CPP1 and CPP2, these are both the employee deductions. There's a threshold of earnings where the CPP rate changes. And on the T4s now we have to separate whether it's the CPP is at the first rate or the second rate. Just trust what the payroll calculator is saying though. It says CPP1, it just calls it CPP on its own, but I call it CPP1, is 3608. And CPP2 is 0, and EI is 12.15. That's what this is right here. 12.15. And so the net amount, so the total deductions is 178, and then the net amount is 562.35. And we can see 178, 562.35. So we haven't made any typos. And that is how I would track using the payroll tracker. So your question might be, that's great, Naomi. How do we get this into QuickBooks? So that's the next step. You'll notice that the pay period is April 13th to 26. So Kamal has put labor in April, but the paycheck date is May. And so it's the Friday after the pay period ends. And when you're doing up T4s, it is important that you use the check date or the pay date, not the worked date. So that's how the T4 totals are added up. In our bookkeeping, we actually have a choice, okay? Majority of the time, we just put it in based on the check date. But some businesses want to get a bit more granular with how their expenses are in, matching the month that the cost was incurred. So when they choose to do that, they generally use something called a clearing account. So we're going to discuss putting this paycheck in 3 ways. First way we're going to do is putting it in based on the check date. Next way we're going to do is based on the period worked, so that the expense goes in on April 26th and using a payroll clearing account. And then we're also going to discuss how to do it with QuickBooks Payroll and letting it all do its own thing on its own for you. And we're also going to discuss Vacation Pay Accrued. So let's go ahead and put this in. So if the business is not using QuickBooks Online to run the payroll, I don't add Kamal as an employee because it's very hard to see the history of an employee that has expenses written against the name employee. You can't go to, like, you can go to the employees tab, but it only shows you paychecks that are run through QBO. It doesn't show you manual expenses that you might be doing if you're not paying for the QuickBooks Online Payroll add-on. So for manual payroll, I would add Kamal as a supplier, but I would put employee in brackets after. So let's go ahead. We're going to go new expense. And this is Kamal Ahmad. And I'm going to put in brackets employee so that I know it's not a supplier, or this isn't the expense report. So we'll discuss expense reports soon. And the payment account we're going to say right now is the Canada Bank Checking, like this. And then the payment date was, so the check date is May 2nd, and the check number was 13. And then now we're going to put in the details of the check. So when it comes to the general ledger accounts, the payroll general ledger accounts are not yet created in this case study because I haven't fired up the payroll module yet. When that happens, QuickBooks will create the general ledger accounts for me. So if I wasn't using QuickBooks's general ledger accounts, what accounts would I use? So I would use wages as the first one. So let's add wages like this. And it is an expense. Some people might say that wages is a cost of goods sold, and it might be. It just depends on the difference between expense and cost of goods sold. Is a cost is something that is part of producing the product or service and wouldn't exist if the product or service wasn't being produced. A landscaper who's buying interlock to install in somebody's front garden, the interlock would be a cost of goods sold because if they weren't installing that garden, they wouldn't be buying the brick. An expense is something that happens whether that product or service is being produced or not. So maybe advertising or insurance. These sort of things are going to happen whether the product is being or service is being produced or not. So wages is one of those things that some businesses split up even further. They might have wages office and then, or wages administration, or they'll have wages cost of goods sold or wages labor, and just sort of distinguish between the two. So there's lots of nuance in there. For now, I'm just going to say that this is expense. And for the detail type, not quite as important, but I'm going to go ahead and say payroll expenses. And the default code of this is exempt. And we don't need a description, and I'm just going to hit save. And I'm just going to say that the amount is $741 and it's exempt. It'll make it even quicker for us if we just sort of go add a scope like that. Now we don't have to worry about that last column at all. It's quicker to tab through. So obviously we're not done, because if we look at the net check amount, the net check amount is $562, and we've got a check right now for $741. So we have to put those deductions somewhere. So we're going to put them into a general ledger account called Payroll Taxes Payable. And this is a bucket that's going to hold the money that we owe to CRA that we deducted off of our employees. So let's create that. And this account type is a liability. So it's not going to show up on the current liability. So it's not going to show up on your profit and loss, right? It's not your expense, that income tax. Your expense is the wages. The payroll tax is the employee's expense that we're taking from them and owe it to the government, because we took it from the employee and withheld it from the employee and we're remitting to the government. So let's see, there's payroll liabilities right there. And the default tax code we'll say is exempt, and we'll just hit save. And I'm going to put in here what payroll tax I'm putting on this line. It'll might help with troubleshooting later. So I'm going to say income tax deducted, and then I'm going to do a minus 130.42. That's the income tax that was deducted from the employee. We're still not at the number yet. We're going to put payroll taxes payable again. And here I'm going to say that this is CPP deducted, and that is minus 36.08. We're still not there. Let's do one more. Payroll taxes payable, and we'll say EI deducted, and that was $12.15. So minus $12.15. So now we're not done. This is that's important. We're not done yet. $562.35. This is only half the story, right? Because with every employee paycheck, the employer also has to contribute to the CPP program, so the Canada Pension Plan program, and to the EI program, the Employment Insurance Program. The employer has to contribute money as well on top of what the employee contributes. Now, the employer doesn't have to contribute to the employee's income tax. That's all the responsibility of the employee. But it's a joint effort with the CPP and EI programs. So let's go ahead and now add the CPP expense and the EI expense. I'm going to call this company contributions expense. I like to say specifically, because sometimes you're like, company contributions, is this the liability account or the expense account? So this is the expense account. This is going to increase our expenses. So it is an expense, and it is payroll expenses related, payroll expenses, and the default is exempt, and we're going to say save. And so I'm going to put in here company CPP. So how much CPP does the company owe? It owes dollar for dollar. It matches dollar for dollar exactly what the employee gives. We both the employee and the employer give the same amount to CPP. And so if the employee had to give $36.08, the employer had to give $36.08. Now we're increasing the expense, and that's why this is a positive number on this expense entry. So let's put another line in, company contributions expense, and I can say company EI. So how much does the employer need to contribute to the EI program as compared to the employee? Well, it's 40% more. That is to say, for every dollar that the employee contributes to EI, the employer contributes $1.40. So basically, we just need to take this $12.15 and multiply it by 1.4. So I'm going to do that right here, 12.15 times 1.4, like this. So that is the company contribution to the EI. And again, that's increasing the expenses. So now our check is no longer right? This is not the net check that we're giving to Kamal. What do? Well, again, we haven't completed the story. Yes, the company expenses increase with the CPP and EI company contributions, but we have to take that money and then give it to CRA. We have a bucket for that. It's called payroll taxes payable. So let's go ahead and add one more line here, payroll taxes payable. And I'm going to say company CPP and EI. And I'm just going to minus these two together. So minus 3608 from there and minus 17.0701 from there. Hit tab. Now it's taken this money that we've increased our expense account with and moved it to the amount that's payable. So it's increased how much we owe to CRA. And these amounts actually are going to coincide with what's on the last tab of this spreadsheet to say how much we now owe to CRA. We can also see that 562.35, we're back again at the amount of the paycheck. We could be done, and a lot of people are at this point, but there are a couple more things that we could add if we wanted to at this time. The first one could be the WSIB expense or WCB expense. I do not do that. I feel like doing it individually on every check is actually leads to more possibilities for typos and things not matching and not balancing. I do it at the end of the month, and I will show that to you at the end of May. The other thing that we do have the option to add here is the vacation pay payable. And this is not necessarily one size fits all, right? If we put the vacation pay payable on each and every check, what's going to happen is our wages expense is going to be higher each and every month. And our liabilities are going to show vacation pay payable on the balance sheet is going to increase. That's useful because it's important to see how much vacation pay you owe now to your employees. So I think according to GAAP, generally accepted accounting principles, that's the preferable way of doing it, is adding it here on these checks. The other way of thinking about it, though, is vacation pay is kind of like if somebody works 50 weeks straight and then takes 2 weeks off, right? If you're seeing that on your profit and loss month to month over time, right, you're going to see a big drop in expense when they go on vacation because instead of increasing wages when you're paying out their vacation pay, you're decreasing a number on the balance sheet. So you see a bit of a drop on your profit and loss month over month. So that is something to take into consideration if you do it that way, entering vacation pay on the check like we're going to do. On the other hand, if you don't do what we're about to do, you won't see that drop in expense. It'll be a consistent sort of expense over time and help you to do more of a month-over-month analysis. So there are merits to both, including the fact that it's one less thing to do now on this check entry. But like I said, according to sort of GAAP, generally accepted accounting principles, we do want to see that liability on our balance sheet. So let's go ahead and add it here. I generally add it to wages expense. And then I'll say vacation pay earned. And so we'll take that 741 and we'll multiply it by 0.04 like this. And then now our check again is the wrong amount because we have to move it from vacation pay earned to vacation pay payable. Vacation pay payable. And that is a liability account. It's going to be on our balance sheet. And I'm going to add it to payroll liabilities. Again, that's exempt. And we're going to go save. And over here, I can say vacation pay banked, if you will. Accrued. That's a better word, isn't it? Accrued. And then we'll say minus 2964. Now it feels weird, doesn't it, that we're having a negative on vacation pay accrued or maybe negative on these payroll taxes payable. That's because this is an expense entry, right? That's why debits and credits mean different things in different contexts. Sometimes it means up, sometimes it means down. So we're not going to go into the accounting equation right now, but you can imagine that when we do go ahead to pay the vacation pay, we'll pull it from vacation pay payable. Instead of saying wages here, it will say vacation pay payable and it will be a positive number. So because this is an expense entry screen, Okay. And because it is crediting the Canada Bank checking, again, it's one of those words, we are debiting the all of these general ledger accounts in the tummy. And a debit to a liability makes it increase. Fun stuff. That's why I don't use the word debit and credit too much. I usually say this goes up and this goes down. So here we go. We're back to 562.35. That's the number we want. We've taken into consideration the company contribution expense, the wages, and the vacation pay payable. So I'm going to go save and close. If we had added that name as an employee, we wouldn't be able to see that expense entry from a succinct list, but now we can. We can go suppliers and we can find Kamal here like this. And now we can see a list of all of the checks that we've written and issued to him. So this is how I would enter manual individual paychecks. I did do a course on how to enter payroll from third-party softwares. That's not what's going on yet in this case study, but it will in future months, so stay tuned. Another thing to consider here is most of the time, this is the way we do manual payroll individual checks in QBO. But there are going to be some businesses sometime that actually want to see the payroll expenses reflected in the month that they were incurred. And in this case, the pay period ended on April 26. And so the business might want the expenses to increase on April 26, right? Even though the bank is decreasing on May 2nd. How would we do that? So what I would do is I would just, first of all, change this to April 26, like that. And then the payment account isn't the checking on April 26. Like the bank, the check date, the bank date is not April 26. So we're going to create a payroll clearing account. Just seeing if I had it already. So payroll clearing. And so that the bank section on my balance sheet stays clean, I'm going to say that this is current assets, even though it's more of a liability. And therefore, I'm just going to call this other current assets. The detail type doesn't matter quite as much. And we're going to say that this is exempt, and we're going to hit save. So now I've got a payroll clearing account that the 562.35 is coming out of. So now I can go save and close. So when you see that 562.35 come out of the bank, you can say new check or expense. We'll say expense, that this was Kamal. And the payment account isn't payment clearing. Now it's Canada Bank Checking. It's 562.35. And instead of the category being wages again, we say payroll clearing, like this. And then we can put in the 562.35 and delete the rest of these because we've already done them. And so now you can see it's going to hit the bank. We're going to go save and close. And I'm just going to show you what that looks like over at the reports, balance sheet. And let's just extend this period to the May 3rd, run reports. And here is the payroll clearing account. It's gone to 0, but you can see there are 2 transactions in there. The first one is the expenses that we put in, and then the next one is the amount being paid out to Kamal. So you can see that the clearing account sort of bridges when we want the expense to hit the profit and loss and when we want to note that the amount is actually coming out of the bank. So that is one of the methods of doing it, though most of the time that I've seen, we just put in the expense dated May 2nd, the paycheck date, because that actually matches how the T4s are added up. Now, I'm not going to keep these transactions. I'm going to delete them. And the reason I'm going to delete them is because I'm going to now do the payroll through QBO's payroll module. So I'm going to go more, delete, delete. And then with this one, more, delete, like that. Excellent. Let's go ahead and go to payroll employees. All right, and let's get started. Get started. So this is the first one. So were employees paid in 2020? Not yet. This is the first check. So we'll say next. And then the first payday is May 2nd. Excellent. And the primary work location. So I just tried to change it to the details for Grand Gate Gardens on the fly here. And it's like, nope, that's fake. That's the problem with doing a case study with payroll, because it doesn't want me to put fake information in. So I had to sort of put my own city and postal code. Let's see if that works. And it was okay with it. Excellent. So who's the payroll contact? I'll put Sarah Travell and my phone number and the email address that I used to set up this QBO account. And welcome, it says. So let's see if we can just go ahead and add an employee here. Add employee. So the first name, new hire form, Kamal. Whoop. Kamal. Middle initial is O. Last name was Ahmad. And then AOK guy at hotmail.com. And then the hire date is, I'm going to say 05. Oh, when was his first day of work? I'm not sure. But the pay period was 13th to 26th. So let's say 04, 13, 25. Enter all their info myself because he does not exist. So Kamal got an invite to Workforce. Let's finish this his payroll info. Can expand this up. And it's not happy. It wants me to put in some more information here in order for us to be able to pay him. So let's see. I think we need the phone number. I think, oh, see, the street address has a star. Let's see if it's going to accept the information I put in. I don't think so, because it doesn't want us to, like, it's very good at checking our work, I suppose. Let's put in what I have. 458 40th Street, Townville, Ontario, K7G1C1. Mailing address is the same. Birth date is January 1st, 2023. Nope, 2003. Here'd be a little one. Whoa, that's 2003, January 1st. And I don't know why they're asking this. I shouldn't have answered it. Didn't have a star. And the social insurance number is 495974156. I don't think it'll like that address. Yeah, it doesn't like the address. Okay, I'll put in my town and my postal code. Okay, save. And so the employment details, this is where we can put in active pay schedule. We're going to add biweekly. Not every week. We're going to say every other week. Next pay is May 2nd. All right. I'm recording on a Wednesday. So there we go. April 26th is the end of the next pay period. So I've been, in my case study, I'm saying that he worked the 13th to the 26th and being paid on the Friday. Doing that gives a few days for us to get the hours and to process the payroll. And especially if you're doing direct deposit, you kind of need it done sooner rather than later. So that's every other Friday, and use this for all the employees we add moving forward. Easy. So we just added every other Friday the pay schedule. And we're going to leave the billing rate blank for now because we're not using sort of the costing and the rebilling in this case study yet. I might in the future. Okay. And next we need to put in the tax withholdings, right? This is where we put in the TD1 form. So we're going to go edit. And the TD1 form that he filled out actually is 0 on both of these. So that's important, like that. But he's not exempt for any of this stuff, so we can hit save. And for the payment method, I'm going to just say paper check for now. I don't know why I had it starred. I'm not going to do direct deposit because there's no real bank right now because it's a case study. So let's do pay types. It's very important. We're going to do hourly 19.5. We don't have to put in this. This is sort of helps the auto pay, but he's got variable hours. we can say that the overtime is going to be probably used. And that's what we're going to do for now. So we're going to hit save. And the next one we need to do is time off. So let's do this one. So in this section, I believe is where QBO has a lot of room for improvement, because it says 4% accrue time hours worked. In Ontario, we don't accrue time hours worked. We accrue earnings based on dollar amounts, because there's overtime, there's bonuses, all of these things don't have any time associated with them. So vacation pay is not accrued by time. Now, vacation time entitlement is an entirely separate thing that doesn't accrue. It's based on a period of time, not the amount of hours worked. So QuickBooks has this set up incorrectly for Ontario payroll, but we're going to use it, and we're going to talk about how to fix the incongruencies here that QuickBooks has. Hopefully, though, this is something that will be improved over time. So even though we want to accrue 4% earnings and not hours worked, we don't have the option to accrue earnings here. We are forced to either accrue time or pay out each pay period. Luckily, though, when it does accrue the earnings, 4% earnings, it does that correctly. So we can still use it, but we are going to have to make tweaks every time somebody works overtime, every time somebody gets a bonus, and every time somebody gets a raise. You're going to have to adjust that time amount, because by default, it's this accrued time, which is not a thing, that shows up by default on the paychecks, even though you can change that. So there's my little blurb, but hopefully that will change in the coming time. So let's go ahead and say 4%, even though I want it to say earnings, but the rate is 4%. And per hours worked, again, it's talking about time, like a vacation sort of policy thing. I don't want a vacation policy based on time and sick days. And I just want to accrue 4% earnings. So we're kind of stuck with saying per hour worked for time, even though it's the earnings that I want to do at the 4%. So let's go ahead and hit save here, and we'll talk about the limitations of that later. So next we're coming to deductions and contributions. And this is actually important to say if there isn't a dental benefit for the employee, because that's going to be part of doing the T4s at the end of the year. So the code for not having a dental benefit is code 1. So code 1, no access to employer dental benefits. So for this case study, that's all we need to do here in the deductions and contributions section for this new employee. So the next thing we need to do before we run the payroll is, as I mentioned when we were setting up the vacation pay quote policy, to say that it's going to be accrued and not paid out every check, I mentioned that the hours don't actually correlate with the earnings percentage. And we don't want those hours accrued showing on the check, because if they get a raise or if they get work overtime, then there's this disconnect, and the 4% of earnings doesn't match 4% hours quote accrued. So we want to stop the hours from showing on the paycheck and say only show what the accrued earnings are on the paycheck. And where we do that is not in this section, but you have to go to a different section called payroll settings, a different section of QBO. And we'll be talking more about this section, but right now, let's just go right down to the printing section and say edit. And then here, I just need to go show accrued vacation balance on pay stub and uncheck show accrued vacation hours, right? Because again, that's not, there's not that correlation there. So we're going to hit save and done. And now we are ready to go ahead and run that paycheck through QBO Payroll. So we're going to go back to this employee list, and here is where I can run the payroll. And we can see that the pay period that we set up is ready to go, and the pay date. And as per what Sarah noted on that PDOC that she did, the hours were 38. So we're going to go ahead and put 38 hours here. And there's no vacation pay or overtime on this check. But what I can do is I can go here and say edit paycheck. And here's where you can see that the deductions here, they are the same as what the PDOC had calculated because they're the same tables. So if you're trying to duplicate a check that was already written and there's a bit of penny rounding, this is where you can change that. And if we scroll down here, you can see that the amount accrued for vacation, that's the same amount that we came up when we were manually calculating it on the manual check entry as well. So again, we'll talk about what the hours are all about when it becomes an issue later on in the case study. So I'm just going to close this, and then we can go to Preview Payroll. And there's that net check. It matches the amount. And again, we can go in and have a look just where we were a moment ago. And one other thing that you're going to want to check is that the bank account that the check was written out of is correctly selected here. Sometimes, or quite often, it's going to default to cash because cash is usually the first one alphabetically. Like there's no bank actually called Canada Bank right now. So if they're with like RBC or something like that, cash is going to be probably the default here. And the problem right now with the QBO payroll is you can't change the bank that the check was paid out of after you processed it. Now, again, I'm talking right now about the GL account. Setting up direct deposit, that is something that's different. That's done in the payroll settings. So, but right here, just make sure that the GL account that the check is coming out from isn't cash, is actually the bank account that it's coming out of. Now we can go ahead and submit payroll. So if I go ahead and show you what this pay stub looks like now, or what the check would look like if you were printing it, you can see that it's showing the vacation earnings balance and not the hours balance, and that's very important. As I mentioned before, if you're showing the hours, when it gets skewed because of overtime or a raise or anything like that, we don't want to give the wrong information to the employee. But for now, we have put in the payroll using QBO Payroll. And it wants us to set up the taxes. But we'll take a closer look at that when we go to pay the payroll taxes on June 15th. Okay, so there is the payroll section of the case study. Let's see, is there anything else in these source documents that we need to do? So let's go up a level, and we have some statements. We only have one. Excellent. So before we do the bank statements, let's go ahead and clear the bank feed. So we're going to go to transactions. So here we are, we're at the bank feed, and when I clear the bank feed, I always start with the credit cards, and then I move to the lines of credit, and then I do savings, and then I do the main operating. The reason I do that in that order is because sometimes we got business owners who pay $1,000 to this credit card, $1,000 to that credit card, $1,000 to the line of credit, $1,000 to savings, and when there's all the same amount payments, it can get confusing when looking only from the bank feed. You're like, which one did this go to? So if you start with the accounts that generally receive those payments from the operating account, you can say, oh, this 1,000 is this one, this 1,000 is this one, and it just makes things more efficient. So with that in mind, we're going to start with the Triangle MasterCard. So we can see that QuickBooks has actually found a match for us, which is that Waterstone receipt that we entered. If you remember the date and the description, that is from the bank and the amount, but the payee, categorization, and tax, that is all QuickBooks just guessing. So the way that I go through these, especially when I have a lot of them, is I'm going to look at the date, May 2nd, look at the date, May 2nd. It says Waterstone. I say Waterstone. Excellent. So I feel confident. I'm going to go ahead and match that. Excellent. There's nothing that happened in the savings account, so let's scooch on over to the line of credit. And it's the same thing. QuickBooks has found a match. It's found that the bill payment went in. In fact, we can expand and we can see that we called it 001, and this is check 00001. But the date, now when it comes to checks, it might take a few days to clear, but you keep that in mind, right? So May, and how many checks for 11,300 have we written for Sarah? Just the one. So it's an easy match. Now let's go over to Canada Bank Checking. So we can see that there is just the one bank feed info line, But QuickBooks can't find a match. It can't find its soulmate. So that's why I call this a lonely single. Now, there are different ways to approach resolving the lonely singles on your bank feed. I'm going to discuss those in a later video. Especially if this was a transaction from Gnome hardware or something like that, we would need to dig a little deeper to find out if it's entered already, paid by, maybe the payment method went a different way, or maybe we had some penny rounding off. There's a lot of ways to troubleshoot lonely singles, and we're going to address that in future videos. Today, though, we're looking at this monthly fee. This is the first time we've seen this monthly fee on the bank feed. So QuickBooks just sort of guesses. So QuickBooks, as a reminder, these 3 columns are all guesses from QuickBooks, and only the date, description, and amount is the information coming from the bank. Very important to remember. So now what we're going to do is we're going to enter a QuickBooks transaction the shortcut way, and then I'll show you what it looks like on the big screen way. Now, I've already used the term shortcut way and big screen way because that's how we did the bank deposits in a previous video. So the shortcut way is using the bank feed. And there's so many benefits to this because we don't have to type the date. There's no date typo we're going to make, and we're not going to make a typo on the amount. And that's one of the reasons the bank feed is very, very helpful. Not only that, we can set up rules. So let's go ahead and do that. So the first thing I'm going to do is I'm going to say that this is Canada Bank. Always say the supplier. And so in the case of bank charges, the supplier is the name of the bank who's charging the fee. And the reason you always want to put the supplier is a lot of times people skip this because they think, oh, it says down here, this is Canadian Tire, for example. I don't need to put it in the supplier box. You do need to put it in the supplier box because if this was, for example, Canadian Tire and you left that blank, you go over to Expenses Suppliers, Canadian Tire to see all your Canadian Tire transactions, it's not going to show because the bank detail or this description when it says Canadian Tire or whatever is not this box, supplier who you paid. So always put in that supplier name. I see a lot of people skipping that. Really, really don't do that. So this is Canada Bank. It is bank charges, but there's no HST. So we're going to go ahead and say that this is 0 rated like this. And I'm not going to add it yet, right? Because you add, remember, this is the shortcut way. I'm going to actually use this that I've teed up and create a rule. And the name of this rule is Canada Bank monthly fee. And when you're setting up rules, you can actually either use this description here for the filter, or you can use the bank text, which is that little bit that can sometimes be different when you expand it and you can see the extra line of text from the bank, or the amount. You can use contains, is greater than, all the different conditions. You can add more than one condition, but I'm happy with all of these. Another thing that I do is I don't replace the bank memo. I like the bank memo that it comes with. Maybe they'll change it. I don't know. I don't want to replace the bank memo. Now, another thing that I do is very important is I don't auto add, right? Over automation can be chaotic. You don't know if you've set up your your conditions properly. There might be something that you missed. So over automation can have things go awry. I really say there are some things that I do auto add, and we'll talk about them in the coming weeks, but not for the most part. I never auto add anything. And another really important that I don't auto add stuff is because if you don't see it, you don't see it. You don't see it show up, right? It's not there. QuickBooks automatically just shuffles it away to where you ruled it to go. And if you don't see it, what if the bank charge increased from $10.99 to $50, right? You want to see that. You want to know if your bank charges increase or if the business's bank charges increase. And you might not catch that if you have all of these things on auto add. So for those reasons, because the conditions might be slightly wrong, something changes that you're unaware of, and you want to see everything instead of it sort of all being hidden, I avoid using auto add as much as possible. So now that we've created this rule, I'm just going to save it. And you can see now that it is teed up and ready for us to just click add. We can trust that the rule that we put is going to say Canada Bank and 0 rated and go to bank charges. Another thing that's useful is if you've got a whole page of these things, bank feeds to go through, you can basically say, just show me all the rules right now. And then you can scroll through them and see them, then select them all with one click and hit accept. So that's also a benefit of the rules. So I'm going to go ahead and hit add right now. And this is the shortcut way of doing the big screen entry. What this has done is it's created the bank transaction expense here for 1099. And you can see, so it's created, this is the big screen thing that we just did the shortcut way. And it also married the bank feed info line to its soulmate. And it's also checked it off as cleared on our bank reconciliation to make our bank reconciliation so much easier. So let's go ahead. We've cleared all our bank feeds. We've solved all our lonely singles. I have a colleague who calls them bank feed orphans. I like that as well. And a lot of people, when they're done clearing their bank feed, they just feel done, right? I'm done. I've cleared everything. Everything's categorized. No, every single month you need to reconcile that bank because there could be double entries and things that haven't cleared. So that's our next step. Let's go ahead and go to the reconciliation screen. Canada Bank Checking. I can open that up now. And we can see that the opening balance, 12,750.51. That's correct. If it's wrong, I'm going to address that in future videos also. And we can see that the closing balance is 429.18 on April 30th. So let's go ahead and put that in. On April 30th, let's go in to start reconciling. So a lot of people at this point, they'll see 0 and they'll feel done. Oh, I want the 0. I got the 0. I'm happy, right? Not quite done yet. Not only are you making sure that everything that is on the bank statement is entered and cleared in the bank, you also have to look at the things that hadn't cleared and decide if you're okay with that. Because the uncleared items quite often represent double entries, right? Like maybe you entered this Gnome hardware receipt at 24 cents, it cleared at 23 cents, and you just assumed you didn't have the receipt. You entered it for the shortcut way, and now you've got it in twice, right? Or maybe this Funky Gifts Wholesale, here's a check that hasn't cleared. Maybe that was actually paid by credit card, right? And you've got the entry in incorrectly. So then when you see Funky Gifts Wholesale go through the credit card and not find a match, you might add Funky Gifts Wholesale as an expense, and now you've got it in twice. These are things that I see all the time, probably the most common error, as well as the double entered income, which again, you would see it as an uncleared item here. So getting rid of these uncleared items, no. So confirming or cleaning up the uncleared items is a really important part of your bank reconciliation. Let's talk about this bank reconciliation screen for a quick second. It's a bit different than when we did the manual bank reconciliation for the bank for March. We did that without the bank feed. Now with the bank feed, we got an extra column or two. So we have a cleared date. And the clear date is useful because this bill payment right here for Signs and Wonders printing, it hasn't gone through the bank yet. It's not on this bank statement. So because it's not on the bank statement, that means it's going to clear at a later date. And that later date could be May 7th or something. And we'll see that clear date when it clears. So we've got the check date that it's written, and then we've also got the clear date that it goes through the bank. So that's a benefit of having the bank feed. You wouldn't have that if you didn't have the bank feed. And another thing that we have, it's got this column here that has a little green box that says, yes, this bank QuickBooks transaction has been married to a bank feed info line. Okay, so that is there as well. And of course, like I said, every time something got married, it got checked off as cleared for us. So this is another huge time saver when it comes to the bank feed. You can see we're actually almost done this bank reconciliation already, and all we did was open it. So let's take a look at these uncleared items. Like I said, that is the next part of your bank reconciliation. Just the 0, even though it is my favorite number, is not enough. So I'm going to first talk about this uncleared check right here. If there was like a debit payment that was uncleared, we'd have to look into that, as I mentioned. But this is a check. So I'm okay with that. That is an okay white line. I call the uncleared items white lines. For obvious reasons, they're white lines. And I say, I'm okay with this white line. If a check was written on April 29th, it makes sense to me that it's not cleared until some point in May. So I'm happy with that one. But this one gives me pause. Like, why do I have a Funky Gifts wholesale check written April 15th that's been out there for 2 weeks and still not cleared? So That, like I mentioned before, it could be that it was actually paid by credit card, or maybe they haven't like cashed the check. I could call them. What I'm going to do is I'm going to take a look at that original document that I had. It is in week 3, and we can see that paid May 15th. So it's a typo, and since it's a live bookkeeping, I can't go back and fix that. I'll put a note on that video. Let's go ahead and open this up and edit it. And I'm just going to change this to May 15th. It's not an uncleared item that I'm okay with because technically the check was written May 15th. So I'm fixing that to say May 15th, and now we won't see it here anymore. So this uncleared item I am okay with because it makes sense that it hasn't cleared since, less than a week ago. So now that we've cleared all the bank feeds and we've come to the bank reconciliation screen and we've confirmed the white lines that we have are okay, and we've resolved the white lines that are not okay, now we can hit Finish Now. Now what I do here is if the bank feed isn't connected, I like to attach the statement. It's nice to have it there. There are some banks that only, BMO, business, I'm looking at you, that only keep bank statements for 3 months. So that's super annoying and not very useful for businesses. Anyway, so I like to attach it right here if it's not attached already because of the bank feed connection. So here we go. I've attached the statement to the reconciliation. And so that is it for the documents. Now we are at the end of a month. April 30th just passed. And so generally what I do is a month-over-month analysis at this point, just to make sure I haven't missed anything or there's any housekeeping that needs to be done. Not a lot going on with Grand Gate Gardens, but I'll just go through the motions for you. We're going to go to Reports, Standard Reports, and I go to the Profit and Loss. And what I'm going to do first is I'm just going to show March to April like this, and then I'm going to say months. So this is how I would do the month-over-month analysis, sort of from the beginning of the year. And for her, she just started in March to the end of the last month that the bookkeeping was done for. And then what we can do is we can analyze what our month-over-month incomes and expenses are, but you can also take a look at what you might have missed or haven't added yet, right? So this is really early on, so it's harder to do that sort of analysis. But an example would be you want to see sort of that $3,000 rent expense every month, and if there's a hole in that row, it makes you go, where did that go? Did that get posted? What happened there? So that's part of doing the month-over-month analysis from the bookkeeper's perspective, is for us to just sort of take a look to see if we've missed anything or misentered or misallocated anything. And looking at this too, it's really interesting. We did talk when we were putting in the purchases for the store, the gift shop that she has, that one method of the retail purchases for resale would actually be to put those towards inventory. And then as the product is sold, that's when you move it over from the balance sheet inventory, what you have, over to cost of goods sold. So you can see that because we didn't do that, because we're doing, if there's a retail bill, put the retail bill in, and then just doing an inventory adjustment at the end of the year, you can see how it affects now the profit and loss. Because she hasn't opened the gift shop in April, she will in May though, you can see there's no gift shop sales to offset the gift shop purchases, and that makes this month show quite a big loss. And so that is part of the method. So that's just something to be aware of when your inventory purchases aren't put to the balance sheet, but when they're put directly to cost of goods sold. So before we move on to reviewing the balance sheet, I'm just going to go ahead for those who are following at home and show you what the profit and loss looks like for just this week that we put in. So run report. So this is the week of paperwork that we put in, and this is what the profit and loss looks like after we've put this week's paperwork in. And now let's go over to reports, and we're going to go to standard reports again. I'm going to go to balance sheet. And when I'm doing my month-end review, I usually just go for this, the current month, the month that the bookkeeping just finished. And a balance sheet is an as of date So this is as of just going to be as of just April 30th. But because I said April 1st here, I can go to select period and say, and compare to previous period. And it's going to show me as of the end of last month. So run report. And here we can see that, for example, Canada Bank Chequing, it's 13/9 at the end of April, and it was 12/7 at the end of March. So this is one way that we can review the balance sheet. Usually what I do is I sort of take a look at each of these lines and make sure they're reasonable, they're what I expect. And you can always click in and look at the detail if you're like, I wonder what that is. A lot of times you might want to check any assets that have changed balance just to make sure that nothing that's not an asset has accidentally gone in there. So next what I'm going to do is, again, for those following at home, I'm just going to go ahead and bump this to the week that we just entered, and I'm not going to say previous period. So as of the end of this week, with the paperwork that has been entered, this is what the balance sheet looks like for those who are following on at home and want to see if theirs looks any different than mine. And if it is, and if you have any questions about that, feel free to put it in the comments. So what are some of the other checks that I do at the end of the month? Well, I look at the unpaid bills and the unpaid invoices. So here's unpaid bills. And I start it from another review that we did when we were doing the HST review. And I just make sure that there's nothing, no housekeeping, no pennies that I need to fix, or double payments or really old stuff. And then I also did the same thing with accounts receivable. And this could be part of the process of chasing, if you want to ask your clients for money. So we can see that there's nothing really housekeeping here that we need to clean up. Everything looks normal. Sarah might be chasing Barb and Jim. But that's just, again, part of my month-end checks, just doing the housekeeping. One last thing that I do is I look at the bank deposit screen. I just crack it open and I just make sure that there's no checks in this section above here that are sitting and not deposited because of maybe double entries or something's gone awry. This is just another place that I sort of look for housekeeping just to make sure everything, all the ducks are in a row, I's are dotted, T's are crossed, sort of thing. So that is it for the case study, Grand Gate Gardens, week number 5 of April, or is that May, week number 1? I wasn't quite sure how to label it. If you have any questions, feel free to leave them in the comments below. I hope you found this information helpful in the building, growth, and success of the business you are working in and on. If you found this video useful, don't forget to subscribe to my channel. I'm also on Instagram at BeThatBusiness, and I'm at Nifty Gnome on Twitch and TikTok. And you can also download the source documents to this case study, find out more about this case study, make special requests for topics you want me to cover in this case study, as well as other resources and courses about running a Canadian business on my website, naomiwilkins.ca. I love making business make sense. The video today was recorded in beautiful Gananoque, Ontario. Thanks so much for watching, and get out there and be that business that thrives.